Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the day's scheduled events for Thursday, the 21st of January. Well, the Bank of Canada surprised the markets by leaving rates unchanged. My reading of Goran Pol's comments is that they probably would have eased, but held off while they wait to see what the new government introduces in the way of fiscal stimulus. They also want to see how the recent decline in the Canadian dollar feeds through to the economy, both by boosting inflation and by helping to support exports. The Canadian dollar has strengthened somewhat on the news, but I think after a while it'll probably go back to tracking oil prices, which don't seem to be turning around anytime soon. So I'd suggest traders should use this opportunity to look for a good point to enter dollar-CAD longs. As for today, the big thing, of course, is the ECB rate decision at 12:45 GMT. Nobody really expects any change in rates or in the quantitative easing program, and so the focus will be on ECB President Draghi's comments at the press conference afterwards. Investors will want to hear how the Council sees the current situation and which way they're leaning. What do they think about China? What do they think about oil prices? What do they think about the outlook for inflation? I think for now they're in a wait-and-see mode. Draghi is likely to just reassure us, as usual, that the ECB is willing and able to act by using all the instruments available within its mandate, as he always says. But I doubt if he'll suggest that they're any closer to taking further steps at this point. That could tend to support the euro today. Without a major change in the data, the next trigger for a change could be the new staff projections for inflation and growth to be considered at the March meeting. Oil prices are now far below what the ECB staff assumed when they made their forecast in December, and the International Energy Agency Tuesday warned that the market could drown in oversupply as Iran resumes pumping. They'll probably have to lower their 2016 inflation forecast as a result of the lower oil prices. The big question is whether they lower their 2017 and 18 inflation forecast too. That would probably force them to ease further. At 13:30 GMT, we get the Philly Fed Manufacturing Index for January. Some improvement is expected, but the poor result of the Empire State Index, down negative 19.4 in January, down from 6.2 in December, makes this questionable, in my humble opinion. A disappointing result could be negative for the dollar. Overnight, Japan will be the first of the major countries to release its preliminary Market Purchasing Managers Index for Japan. The PMI isn't usually a big deal for Japan. In fact, most Japanese indicators aren't that market affecting for some reason. But the PMIs for France, Germany, and the Eurozone as a whole, which come out early Friday morning in Europe, are a big deal. These are the first major indicators for the new year, and as such should be closely watched. Until recently, the survey data has been stronger than the actual data, but it looks like this discrepancy may start to be rectified. German and Eurozone manufacturing PMIs are expected to decline slightly. That could prove euro negative, especially if the US PMI comes in a bit higher later in the day, as expected. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.